Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get into this brand new trading session. It is an important one because it's also the options expiry day, so it will be an important session, and there's lots that's come through in terms of global cues. So let's start off with what the Asian markets are really doing after the Fed minutes that we got, largely higher for Asia. As you can see, the Hang Seng is up around 70 points. You have the Taiwanese markets trading with gains of 0.9%. In fact, all Asian markets are in the green, barring just the Straits, which is seeing just a minor downtick right now. So a pretty good start for the Asian markets across the board. The Nikkei is shut, but everything else is doing quite all right. So Shanghai is around 0.5% higher. Kospi is the one which is actually doing the best, trading with gains of over 1% right now. So all in all, a good start for Asia. The SGX Nifty is up on your screen. It is indicating that the start for our own markets will be positive. I mean, of course, this is after the huge sell-off that we saw yesterday. Around 270 points lower is where we ended yesterday. But right now, the SGX is suggesting that the start for our own markets will be around 56 points in the green. So that's what's happening across Asia. But let's also talk about the US then. Wall Street ended yesterday's trading session mixed as the Fed minutes meeting continued to keep the investors on edge. So the Dow Jones lost around 85 points. The S&P 500 was down around 0.2% at the close, and the Nasdaq Composite was the outlier. It closed with just some minor gains, like you can see, around 14 points higher there. But on that note, let's focus on the big cue for the day, that is the Fed minutes that came out yesterday, and they show that members have resolved to keep fighting inflation with rate hikes. CNBC's Steve Leisman sums it all up for us.
Almost all participants at the last January meeting for the Federal Reserve agreed on the 25 basis point rate hike. Ongoing rate increases were seen as appropriate by all members of the participants in the Federal Market Committee. 25 basis point hikes were seen as allowing the Fed to assess the economy and the impact of rate hikes as they went along. However, a few wanted to raise by 50 basis points. In common Fed speak, a few is more than two, so there may be another person, or appears to be another person out there other than the two whom we know, Bullard and Mester, who wanted to go 50. They wanted to go 50 because they wanted to bring the Federal Reserve more closer, more quickly to the target where they were trying to get to. Several saw risks to the outlook as becoming more balanced. Participants supported maintaining a restrictive policy stance until inflation was clearly on a path towards their 2% target. Inflation was seen as unacceptably high. There was substantially more evidence was needed for confidence that inflation was on a downward path. It was important for financial conditions to reflect policy restraint from the Fed, and they did see more financial condition tightening than they hadn't seen in 2022. Upside risk was seen to inflation, but a few saw the risk as more balanced. Economic risks, however, were to the downside, and GDP was expected to slow further in 2023. Worth mentioning at this point, a little asterisk here, all of this came before the big jobs report and the big retail sales report and the stickier inflation numbers that we had. This is all before those numbers. There was a period of below-trend growth was seen needed in order to bring supply and demand back into balance. Finally, there was an elevated chance of recession seen in 2023, although some said that the China reopening and the euro area growth, which had been better than expected, could help U.S. demand.
All right, Steve, thanks a lot for that. In fact, Steve briefly also alluded to what James Bullard, CEO and president of the St. Louis Fed Reserve, had to say. So listen in to some of those comments.
The U.S. economy is stronger than what we previously thought, and you certainly see that in the blowout jobs report. Unemployment ticking down, not up, at a 50-year low. Other indexes, the labor market, very, very strong. Claims still very low. So I just think you have a very strong labor market combined with more momentum coming out of the second half of 2022 than we previously thought. So that adds up to markets wanting to price in a tougher road ahead for inflation, in disinflation in 2023. I think the 5%, I think we are going to have to get north of 5%. Right now I'm still at 5 3/8. So we got a little ways to go here, and I've argued that, hey, let's get to where we want to go, and then from there we can see how the data come in. Let's hope that we get disinflation in 2023, but right now it came in hotter than we thought.
All right, that is the word coming in from James Bullard. But let's now talk about all of the cues that we should track as we get into this all-important trading day. We have our research team here with the trade setup. Ekta, Mangalam and Surbhi are all with me to take you through the trade setup and really prep you for this trading session. Guys, a very good morning to all of you. Ekta, how is it looking this morning? Because yesterday, like we know, and pretty much this entire week has been quite rough for us.
Well, yes, no doubt, Pavitra. Morning. Well, the markets did fall for the fourth straight day yesterday. It was the biggest losing streak that we've seen in around 5 months. The Nifty closed at 17,554. The advanced decline ratio, which indicated the broad-based selling, in fact, was the lowest that we've seen since 27 Jan. All of the sectoral indices ended in the red yesterday. FIIs net sold around 579.8 crores. Remember, they were buyers in the previous session. DIIs net bought around 371.5 crores. Fears of overall further tightening, the Adani Group rout that we've seen in terms of stocks as well as financials seems to be weighing on the markets at this point in time. Now, in terms of the global cues, that seems to be top of mind again because we moved to the global tunes yesterday. So the US markets ended mixed overnight. The FOMC minutes members have indicated they want to continue in fighting inflation. However, Asia is largely positive. SGX is positive. One of the reasons why the Indian markets might be possibly on the front foot is because Brent crude has corrected further by around 2 to 3% overnight, down to around $80 per barrel. The big Q is F&O expiry today, and just watch out for the financials because the Bank Nifty ended lower for the fifth consecutive session. It is now below 40,000 for the first time since the 17th of October. And separately, we did have some comments come in from the RBI MPC meet as well. So financials would be top of mind in terms of an index as well as the F&O expiry as a whole.
All right, we will watch out for the financials. Ekta, thanks a lot for taking us through all of those cues. But let's also talk about some of the other stocks that could be in the news today based on some news flow that came through. So Surbhi is here with that entire list. Good morning, Surbhi.
Hi, morning. Few names that I'm tracking this morning. The first one is the entertainment, where NCLT admits IndusInd Bank's insolvency plea against the company. The next is Hero Moto, where the company initiates operations of public charging infrastructure in Bangalore, Jaipur and Delhi. They set up 300 charging points at 50 locations across these three cities. HG Infra, the company has been declared the lowest bidder by RVNL for a bid cost of 466 crores versus a project cost of 535 crores. Tata Steel, where the company has acquired 4.68 lakh shares of NINL worth 300 crores. This is as the first tranche of investment in the company. Orient Cement, where the company's non-binding MOU with Adani Power Maharashtra stands terminated. Sonata Software, the company's wholly owned subsidiary, acquires a Texas-based IT company, Quant Systems. And lastly, Mahindra CIE Automotive, where the company declares its Q4 calendar year 2022 results, where the revenue is up 35% at 2250 crores and an EBITDA margin saw an expansion of 300 basis points at 13% versus 10% same time last year.
All right, Surbhi, thanks a lot for taking us through that entire list. Of course, you know, the oil impact will also play out. So with crude at 80, watch for all of the usual suspects. But with that, let's also talk about the cues from the F&O space. Mangalam is here with that. Mangalam, it is expiry day and it's really not been the best series.
Well, it hasn't been the best series. It is Feb series expiry today, and this series so far, we've lost about 338 points on the Nifty. But guess what? You know, almost 90% of those losses have come by in just yesterday's trading session. The Nifty was down 270 points in yesterday's trading session. Not much to write home in terms of cash flows because, you know, for a 270-point decline on the Nifty, you would have assumed that the FII selling is a lot more than just 580 odd crores, and the DII buying is, you know, a little less than 372 crores, or both institutions are selling, but that wasn't the case to be. The selling is mostly on the futures side. The FII sold almost 2,700 crores in index futures, 351 crores were sold in Nifty Bank futures, and 2,400 crores were sold in the Nifty futures itself. And that is what the real worry is, because the SGX Nifty is indicating a positive start, and that would be perfect opportunity for the bears to short the gap up. 40,000 shorts added by the FIs in yesterday's trading session. They've bought 8,800 crore worth options, and they've bought about 1.5 lakh calls and puts each, perhaps playing for either a breakout or a breakdown of the narrow range that we've been trading on. 17,700 call added about a crore shares for a premium of 14 odd rupees. 17,400 put also added about 30 lakh shares for a premium of 10 odd rupees. but the option selling suggests that, there is a fair amount of resistance on the way up. We've seen 1.37 lakh calls being sold for just about 66,000 puts being sold. Where are those resistance marks? 17,600 upwards is a fair amount of resistance. That's where the SGX Nifty is indicating a start. The Nifty is below the 200-day exponential moving average. The SGX Nifty is indicating a start around those levels. At the lower level, a bigger support will come in at the 200-day simple moving average. The Nifty Bank is also below the 200-day exponential moving average. The 200-day moving average, simple moving average support comes in a little over 39,150.
Hey guys, welcome back. You're still tuned into Power Breakfast. Now, something more that we were telling you about is that members of the RBI Monetary Policy Committee remain quite cautious on inflation, but they are divided on how it should really be tackled. So Lata is here to take us through the minutes of the MPC meet and also what is this quite divided vote. Lata.
The Reserve Bank members of the MPC are very clear that inflation is not moving down as much as they would like to. The governor, for instance, points out that the November-December inflation that fell was entirely because of vegetables, which is a seasonal factor, and core is not falling. Dr. Rajiv Ranjan also pointing out similarly. He says the intermittent elements of inflation are falling, but steady inflation, which is core, continues to rise. And Dr. Patra going the distance and pointing out that inflation is actually hurting growth. The consumer surveys are indicating that people are not spending because they are, their purchasing power has been reduced, and firms are not investing because they are uncertain that inflation has firmly come down. He believes, therefore, for growth itself, inflation needs to be brought down. The external member, Dr. Bide, largely agrees with the governor and Dr. Rajiv Ranjan, saying that the core part of inflation needs to fall, and that's why he supports the rate hike. The two external members who have disagreed both on the stance and on the rate hike, Dr. Verma and Dr. Goyal, point out that much of the work is done and we have to wait to see the impact of rate hikes, which will be felt in lower inflation in the coming months. Dr. Goyal in particular saying that you will see a reduction in home demand as interest rates rise, and then inflation will come down. Dr. Verma even criticizes that the RBI forecasts are based on crude at $95, whereas crude has not been at $95 for a very long time. So inflation, therefore, has been over-projected. He also points out that the Reserve Bank was slow to raise rates, and now it is overdoing it. So while it hurt inflation earlier by slow action, now it is going to hurt growth by acting too much to make up for lost time. So clearly, it doesn't look like Dr. Verma is going to change his mind any time. But Dr. Goyal, when she spoke to us, did say that she is data dependent. And if the Rabi harvest were not to be as good, and if data proves that inflation is sticky, then yes, the policy will have to be data dependent. Dr. Bide also believing that near-term inflation could be a little higher than expected, considering the Jan inflation also has been higher. That's the sum and substance of the minutes of the Monetary Policy Committee.
Back, you're still tuned into Power Breakfast, and let's talk about the commodity space because there's been a lot of action there as well. Manisha joins us to fill us in. Manisha, big slip in crude prices.
Oh, well, yes, and with 3% of decline overnight, we are now trading at a two-week lows in case of the crude oil prices. There has been recession fears coming back on the sense that the aggressive rate hikes in the U.S. may just about continue. The U.S. dollar index also is trading at a 6-week highs right now, so many of these dollar-denominated commodities have seen some decline. Also, the U.S. crude inventories have risen by 9.9 million barrels, is the report coming in from API. We, of course, will wait for the Department of Energy in U.S. to release that report. But having said that, the U.S. crude inventories have been rising every single week since the mid of December, and we are right now at 2022 highs when you look at the crude inventories. The snowstorm in U.S. North Plains also has hit the fuel demand. The U.S. gasoline prices also saw a decline of 4%. That one is trading at a two-week lows as well. So everywhere that you look in sense of energy markets is trading in the negative right now. Not so the case for many of the metal prices. While we have seen iron ore and steel prices gain, there is some decline that you've seen come back in case of gold, silver. They are trading at a three-week lows. Even the copper prices have come off its highs, so trading at two-week lows onto that one as well.
All right, Manisha, thanks a lot for getting us that complete roundup of what's going on in the world of commodities. With that, we will wind down on this edition of Power Breakfast with the news that the Asian markets are pretty mixed actually in the past couple of minutes. Many of them have slipped, so the Hang Seng is down around 0.2%. No big cuts seen, but strays Shanghai Hang Seng now in the red. The SGX Nifty, however, is still indicating we will get a positive start, around 50 points higher, but this is after the sharp sell-off that we saw yesterday. Thanks for tuning in. Bazaar Morning Call up in 2.